Hey everyone, welcome back. Today we're looking at Polestar. Polestar shows how tough being a startup can be. The Volvo spin-off brand has spent more than $1.5 billion, that's 1.2 billion pounds, on day-to-day operations in 2023 alone. And I believe that's 2023 up until Q3. That doesn't actually include Q4 because we haven't even finished Q4. So that's the majority of the year, approximately 9 to 10 months. And as it turns out, because they're building more vehicles right now, and they're planning on building even more vehicles next year, they need a lot more money to sustain this growth. So it's tough to be a startup in the car industry. It's one thing to engineer a car ready for production, quite another thing to then put it onto mass production, satisfy all kinds of legislation, manage sales channels and after sales, and generate public awareness. No other products require such careful cradle to grave attention and management, the burden as cars, and you have to do it for multiple models at the same time for wildly different markets. Tesla's made a loss for 17 years straight before turning a profit in 2020, and it's truly the anomaly for a car making startup achieving success. So many names have faded away. Faraday Future, others have gotten there but are struggling, such as Rivian. Dyson got to the point of making a car, having spent billions to get it into production readiness, then pulled out anyway. Then there is Polestar. What can I say about Polestar? The CEO has a few things to say, and I'm curious on this. So let's hear what the Polestar CEO, Thomas Ingerloth, has to say.
Our message here from our Polestar Day, how we call it here in LA, major parts here. One, of course, the great news about the product rollout, and the other part about what work we have done over the last summer about the business plan. Obviously, making that a strong, resilient business plan. View on the break-even, cash flow break-even, 2025. So what I would call in a very short distance, very much in sight.
That's one of the things that the CEO has to say. They intend to be cash break even by 2025. Is this even accomplishable? Like I stated before, this company actually plans to grow more. They need to grow more. It's very much necessary. But can they survive this extreme EV market? You're basically swimming with sharks. Now, based on revenue, the company is growing substantially. If we're looking at towards the end of 2021 and early 2022, the company was actually making roughly around $500 million average. And this was per quarter. Now, if you look towards the end of 2022, that's when they got really close to making $1 billion per quarter. But that's in revenue. That's not profit. Let's make that very clear. And you can see 2023 so far, they've been above 500 million per quarter. They've been above 600 million per quarter, almost 700 million in the second quarter of this year. So they were doing really well. So it's going to be interesting to see what they can accomplish in the last quarter of the year, considering that they don't intend to deliver a lot of vehicles compared to last year. They're looking to deliver around 60,000 vehicles this year. Last year, I believe they delivered 52,000 vehicles, so it's not going to be a huge difference. And it's still the same vehicles. I believe it's still the Polestar 2. There might be a few Polestar 4 hitting the Chinese market before the end of the year, so that might make a small impact, but can't expect too much. So what else does the CEO has to say?
2025 cash flow break even, and the funding need that is needed from today till this break even, a very clear defined amount of 1.3 billion, which we want to cover with a mix of debt and equity. So
there's one thing to keep in mind. In the interview that I saw, Thomas Ingerloth was basically explaining that with the funding that they need, very obvious number, 1.3 billion, he also expressed how they intend to accomplish this by a sum of debt and equity as well. But what really made headlines was Thomas Ingerloth stating that the Polestar company is open for international investment. That's what made headlines. It made significant headlines, and it's been making headlines ever since. But setting ourselves away from that, the Swedish electric performance car brand today represents a strengthened business plan which targets an accelerated margin improvement and a reduction of company's total funding needed to the point of cash flow break even in 2025. That seems to be the big target right now for Polestar. Cash flow break even by 2025. They're making that very clear, and they're making it as loud as possible that they want to accomplish this and they believe that they can. But how they will do this, it's another story. In light of the fast changing operating environment, Polestar has introduced a strengthened business plan that reorients a path to profitability by prioritizing margin progression over volume. For the fiscal year of 2025, Polestar is targeting a gross margin in the high teens with a total annual volume of approximately 155,000 cars to approximately 165,000. Let me explain this. Basically, by that time, in 2 years' time, they're looking to build an additional 100 vehicles per year by 2025. Apparently, that would help them in the quest to cash flow break even by 2025. And I can see how that could be accomplishable. With the Polestar 3 being the big winner, that car being the car that will bring them a lot of money because it's got high margins. You can make a lot of profit on that car. It's perfect for the US market, it's perfect for the European market. While the sibling to that, something between the Polestar 2 and the Polestar 3, the Polestar 4, so confusing the namings unfortunately, but that smaller vehicle, but also considered almost like the Model Y equivalent to an SUV, that car is there to basically replace the Polestar 2 in sales numbers. Just like how the Model Y is doing better than the Model 3 for Tesla. In some reasons, Tesla's actually struggled a little bit to sell the Model 3s compared to the Model Y. They're actually selling a lot more Model Ys. The demand for those are crazy. And I think Polestar recognized this and they're going to capitalize on this using the Polestar 4. As long as this car can compete with the Model Y in terms of size, interior and exterior. Can it offer similar range? Can it offer similar performance? Similar interior space? So with this amount of car that Polestar is expecting to deliver by 2025, this is expected to be achieved through a richer product mix. With full models in production, reduced cost structure, and refocused approach to key markets, including a key joint venture in China and measures to improve profitability in the US businesses. Polestar has already implemented cost reduction measures announced earlier this year around headcount reductions and continue to advance active cost management efforts. Polestar CEO Thomas Ingeloff says by having taken the necessary steps to rework our business plan, we're reducing costs and improving efficiency to create a more reliant and profitable Polestar and reducing our funding needs at the same time. Achieving cash flow break even already in 2025 will show the strength of our asset line business. Margin over volume is our way forward, supported by a gorgeous lineup of 4 exclusive performance cars, showcasing the continued commitment to Polestar, Geely, and Volvo cars of providing additional liquidity to the company. Pursuant to the amendment in its existing shareholders' term loan, Volvo has extended the maturity of its outstanding term loan by over 3 years by June 2027 and provided an aggregate $200 million in additional loan capacity with the same maturity date, bringing the total investment to $1 billion. In addition, Geely Sweden Automotive Investment AB, an affiliate of Geely Holding, is making an available $250 million in terms of loan on substantially the same terms of Volvo cars, including the majority of June 2027. Both loans have optional equity conversion features. Based on the reduced funding need from a strengthened business plan and new and existing financial and liquidity support from Geely Holding and Volvo Cars, Polestar expects it will require external funding of approximately $1.3 billion until achieving cash flow break-even targeted in 2025. Working alongside its major shareholders, Polestar is well progressed on holistic financing plan to provide the remainder of funding required, including additional debt and equity. Now, if this is all the cash they need, $1.3 billion to accomplish cash flow break even by 2025, This is great for us as investors because Polestar delivering 150,000 vehicles or 165,000 vehicles is very much accomplishable. We're aware of how far this company has come. They've come a long way. And we've seen how capable they are at advancing the business and what strengths they have as a brand. It's very much accomplishable. And by cash flow break even, it's going to be a major step for them because it's only up from there. It is only up from there. This is where Polestar will at least be able to swim above water. Right now, they're still underwater, but let's get to that place where they can swim above water. Do you think Polestar can become cash flow break even by 2025 with 165,000 vehicles being sold in that fiscal year? And if they do break cash flow even by that point, what does this mean for us as investors? I happen to believe it's a great position to be in. I really do. Compared to where the stock price is right now, I can see it doing a lot better by 2025. And along the way, it will be gaining a lot of momentum. Thank you for watching, and I'll see you in the next one. Peace.